Hey everyone, welcome to another Real Investor Routine. I am Francisco, your specialist in automated investments for people who work their tails off in the US. Today, I'm going to show you how your packed schedule might be eating away at your wealth and what to do to turn this around in less than 15 minutes a week. Quick bit about my experience. I've been in the stock market since 2006 and I've been through it all: mistakes, bad timing, chasing the wrong shortcuts, until I finally created my own method that solves in minutes what used to take hours or never even got done. In this video, I talk about how to stop losing money and your peace of mind because you can't invest at the right time. Losing timing in the market isn't just about missing the perfect entry or exit. It's a bitter feeling of seeing the alert pop up on your app and because you're in the middle of a meeting, a shift change, or a trip, you simply can't act. You wake up the next day thinking, if I had clicked at the right moment, I'd be celebrating instead of patching up losses. For people with a heavy schedule, losing timing becomes chronic. It's not a lack of knowledge, it's a lack of real time availability to execute. And that quietly eats away at your confidence because every minute lost is money that's no longer compounding and peace of mind that lives right along with the growth potential of your wealth. According to a survey by the North American Securities Administrators Association, 65% of individual investors say they've already missed investment opportunities because of lack of time or having too many day to day commitments. I've lived this firsthand. I remember one Friday, an alert went off on my app, but I was stuck on a work call. By the time I finally got a chance to look, the window had already passed. The price had taken off, and all I was left with was frustration. In other words, bad timing isn't a technical issue. It's what separates the investor who actually builds wealth from the one who always feels like they're scrambling to make up for losses. Do you know why highly capable professionals still lose money even when they know exactly what to do? That's the big paradox. We're used to solving complex problems at work, hitting targets, delivering results under pressure, but when it comes to managing your own investments, you feel like an amateur. It's not a lack of intelligence or motivation. It's a routine full of unexpected issues, overlapping schedules, family, and the performance demands that makes it almost impossible to sit down and execute when the market calls. The result: opportunities slip by, rebalancing is delayed, decisions get kicked down the road, and the frustration builds because you know what to do. You just can't do it at the right time. A study published by the JP Morgan Asset Management shows that in the US, individual investors, including high income professionals, lose an average of 4% per year in performance because they can't execute their strategies at the right time due to procrastination and the emotional impact of their day to day routine. And what are the most common mistakes people make when confusing discipline with practicality when it comes to actually executing their investments? A lot of people believe that investing well is all about discipline, like it's just a matter of wanting it more or trying hard. But in the real life of someone working hard in the US, discipline without a process just turns into one more thing to beat yourself up over. The common mistake is trying to fit investing in whenever there's a leftover time, which basically never happens. Practicality, on the other hand, is having a lean, easy to execute method that fits into the 15 minutes you have between one commitment and the next. It's about replacing daily willpower with a ready-made automated, battle-tested routine for busy professionals. That's what actually delivers consistent results without relying on luck or on some perfect day that never comes. I've already tried relying on discipline alone. The truth? It lasts a week or two, then real life swallows it up. According to the Harvard Business Review, professionals who create automated routines for financial decisions are 45% more likely to reach their investment goals than those who rely on discipline alone. Why does investing at the right time completely transform your long term results? Imagine the difference between always leaving late and having to jump on the train while it's already moving versus showing up on time and locking in the best seat. In the market, every decision made at the right time lets you capture opportunities and protect your capital from unnecessary losses. JP Morgan's studies proves it. Investors who miss just the best day in the market can lose up to half of their portfolio's growth potential. In the long run, it's not just about how much you invest, but when you execute. The result, peace of mind, growing wealth, and the pride of not living in damage control mode. Have you ever wondered what's the biggest benefit of having a decision making process that takes less than 15 minutes? Time is the scarcest asset for anyone with a crazy schedule. Having a lean, proven method that fits into 15 minutes means investing stops being a burden and becomes part of your routine, as automatic as your morning coffee. It reduces anxiety, kills procrastination, and most important, allows you to invest consistently without depending on miracles or luck. The biggest benefit, freedom. You control the process, not the other way around. And that lightness positively impacts your whole life, not just your bank account. How can you have a discipline without relying on daily willpower? Science has already shown, and the Harvard Business Review has confirmed, that creating an automated routine is what truly works. Forget promising yourself that this time it will be different. The secret is turning investing into a habit as automatic as brushing your teeth. You remove the mental fatigue of having to decide every single time, lower the risk of failing because you're tired or distracted, and massively increase your odds of success. It's discipline without suffering, proven by countless students and success stories. What happens if you keep leaving your results up to luck? Leaving things up to chance is the biggest driver of frustration and losses for anyone trying to invest without a method. In practice, you become a hostage to market mood swings, other people's recommendations, and the famous "I'll look at it later." The outcome is always the same: missed opportunities, rushed decisions, and an endless cycle of guilt. Those who've switched to an automated system report more confidence, less anxiety, and most important, real results. The risk of not changing is staying exactly where you are or worse. Do you know when is the best time to start an efficient routine, even with a packed schedule? The best time is now, and I say that not just for the urgency, but because the more intense your schedule is, the more you need this method. Waiting for things to calm down is a trap. Life never slows down just to make it easier. The students who transformed the most were exactly the ones who started in the peak of the chaos and discovered that with a high make process, your routine stops being the enemy of your investments and starts being an ally. The right timing to change is always today. Even after all this, you might still be thinking, but I really don't have time to take care of my investments. Or, this seems way too complicated to fit into my routine, which is already insane. That feeling is absolutely normal. And honestly, I've been there too. There's zero shame in admitting that between meetings, shifts, family commitments, and sheer daily exhaustion, taking care of your own money always ends up getting pushed to later. But that's exactly where the turning point is. I deeply understand what you're feeling because I've lived it myself. For years, I saw myself as an exemplary professional at work, always delivering results, being a reference in my field. But when I looked at my investments, I felt this kind of silent shame. How can I be so competent here and such an amateur there? I knew I needed to invest better. I knew what to do, but I simply couldn't find the time. And when I did, I was already mentally exhausted. The guilt hit hard, especially when I saw colleagues getting better results, often just because they had more availability. If you feel that way, know that you're not alone. It's more common than you think, especially among people with intense routines who live under constant pressure. And it's not just me saying this. According to an NASAA study, 65% of individual investors have already missed investment opportunities because of an overload of commitments. In other words, most of us are dealing with the same dilemma. Here's the point: your routine is not going to slow down to make your life easier. Waiting for the perfect moment is a trap. What really changes the game is having a method that works within your routine, not outside of it. And this is where the concept of automation comes in, not as a way to give up your autonomy, but as the best way to make sure every small window of free time is used intelligently without waste. Automating doesn't mean putting your money on autopilot and hoping for the best. It means structuring an efficient, proven, and tested process that fits exactly into your day to day life, no matter how hectic it is. According to the Harvard Business Review, professionals who create automated routines for financial decisions are 45% more likely to reach their investment goals than those who rely on discipline alone. This isn't theory, it's science applied to real life of people who are constantly on the go. I myself was only able to flip the switch when I stopped relying on willpower and started trusting a lean process that takes less than 15 minutes a week. Over 70% of my mentees reported the exact same transformation. Before, they tried to fit investments in when there was time and lived in a constant state of frustration. After, they started seeing consistent results because the method adapted to their routine, not the other way around. Another important point: you might be thinking that only people who live off the markets can apply these strategies. The truth is actually the opposite. The method I teach was created and tested specifically for people who are not traders. People with demanding careers, families, responsibilities, and those simply cannot afford to spend hours staring at the charts. I'm living proof of that because this methodology was designed exactly for this profile: intense routine, little free time, and the real desire not to leave their wealth behind. And if you still think it's not possible, think about this. The harder it seems to fit a new habit into your schedule, the more urgent it is to adopt a ready made, lean process that works even in the chaos. Because discipline alone doesn't survive exhaustion, emergencies, or an unpredictable daily life, automation does. And that's why the people who adopt this method not only invest better, but also feel relief, pride, and confidence in every step they take. Studies by JP Morgan show that losing timing in the market can cost you up to half of your portfolio's growth potential over the years. In other words, continuing to postpone this decision isn't just uncomfortable, it's expensive in the long run. Every "I'll deal with it later" cycle represents not only lost money, but also more anxiety and less personal fulfillment. At the end of the day, the decision is yours. Wait for the perfect moment, which never comes, or finally take control with a method created specifically for people who live under pressure. The best results I've ever seen come from those who decided to start in the busiest phase of their lives, because that's when the real transformation happens. So, if you feel like you don't have time, this method was tailor made for you. If it seems complicated, remember, the more simple and adaptable it is, the more effective it will be in your routine. The best time to change is now, before the next cycle of opportunities passes and that feeling of being behind starts weighing on you again. You don't need to wait for life to slow down to invest better. You just need to take the first step and experience, in practice, what's already been proven by science, by real cases, and by the experience of those who have already walked this path. You already understand that waiting for the perfect moment makes you miss opportunities. And as the JP Morgan study showed, it can cost you up to half of your long term wealth growth potential. This is the invisible price of procrastination. Every I'll deal with it later cycle eats away not only at your results, but also at your self esteem and sense of control. The most common trap is believing that someday your routine will slow down and you'll finally have that free time to take care of your investments. But as anyone with a demanding career knows, that never happens. Work demands more, family needs attention, unexpected events pop up, and investing always gets pushed to later. Science is clear. Important habits only consolidate when they're scheduled into your calendar, not when they depend on whatever time is left over, according to a Harvard Business Review study titled The Power of Creating Financial Habits. Another recurring mistake is trying to invest on the fly, between meetings at the end of the day when you're already exhausted. The problem is that, at that point, your decision making energy is at its lowest. The result? Rushed decisions, forgetfulness, incomplete execution, and that frequent feeling of, I could have done better. Improvisation is the breeding ground for mistakes and financial anxiety. Signals and alerts exist to remind you to act, but if there's no method behind them, they just become one more notification you ignore. Another mistake is procrastinating, essential rebalancing, because you believe one more week won't make a difference. The truth is that repeated neglect creates a snowball effect. Small omissions add up to significant losses over time. Here's the secret of the people who prosper the most. They don't wait for free time to show up. They create it. A 15-minute block, scheduled religiously every week, is enough to review, decide, and execute the necessary adjustments to your portfolio. It may sound like very little, but frequency is what makes the difference. Small, consistent actions beat big promises that never get fulfilled. Blocking that time is a commitment to yourself, and according to Harvard Business Review, that's how healthy financial habits are formed and maintained. Complexity is the enemy of execution. The right method reduces decisions to what really matters. A clear checklist of 5 to 7 steps that guides you through the essentials. Example of a weekly checklist. Review balance and planned contributions. Check rebalancing alerts. Confirm necessary moves. Buy, sell, adjust position. Log your trades in a simple record, spreadsheet, app, or notebook. Schedule the next review block. Checklists remove the weight of doubt reduce the risk of forgetting something, and let you delegate part of the process to automated tools without losing control. The temptation to track every asset, read every report, and try to predict the market is huge. But in real life, that only creates paralysis. The right method focuses on 5 to 20 assets max and limits your decisions to what truly moves the needle on your network. Remember, consistency and simplicity beat complexity and information overload. Automating is not giving up control, it's eliminating friction and the tiny wasted minutes that, when added up, keep you from acting at the right time. Today, there are tools and brokers that let you set up automatic contributions, periodic rebalancing, and even alerts for decision making. The key is to use technology as an ally while always keeping a manual or digital record logs of your trades to guarantee traceability, learning, and above all, safety. After all, as the experience of top investors shows, those who keep records learn faster and avoid repeating mistakes. What matters is this: automate as much as possible, but never lose command of what's happening. That reduces the risk of procrastination and guarantees consistency, even in the most chaotic phases of your professional life. Don't wait for the perfect week. The best moment is now. Open your calendar and block 15 minutes sometime in the next 7 days. Prepare a simple sheet or spreadsheet with your weekly checklist. Choose the main assets you are going to monitor, no more than 20. Define a simple rebalancing rule. For example, whenever an asset moves more than 5% within your portfolio, sit down and go through the entire checklist, even if it's just to review and not actually execute any trades. The simple act of performing this ritual already puts you in the group of people who take action, not just the ones who plan. According to the Harvard Business Review study, this first practical step increases your chances of hitting your financial goals by 45% because it turns intention into a real routine. Unexpected things will happen. The secret is to be flexible with when your weekly block happens, but inflexible about not skipping the week. If Monday is impossible, move it to Wednesday. If the week is chaotic, use 5 minutes instead of 15. What matters is not letting the routine break. Behavioral studies show that consistency, even at a minimum level, is more powerful than big, sporadic efforts. Here's a practical approach summary. Schedule a fixed 15-minute weekly block to manage your investments. Build a simple, objective checklist for each section. Automate everything you can, but log your decisions and keep records. Limit the number of assets and decisions to avoid paralysis. Be flexible with the time of day, but inflexible with the weekly commitment. Review your results monthly and adjust the process if needed. Today, we saw that bad timing is not about not knowing what to do. It's about not having the right routine structure, and that it is possible to change that in a short time, even when you're working like crazy. If this content resonated with you, hit a like, drop a comment below, sharing one challenge from your routine, and share this with another person who's dealing with the same pain.